After natural gas recently witnessed this massive crash to the downside, we've seen the formation of this falling wedge, which is now currently being invalidated with this recent bullish breakout to the upside. We've seen that actually coincide with this divergence between cumulative volume delta and natural gas, which has shown you some bullish pressure actually regaining some strength again. But whether this is actually the beginning of a long-term bullish trend here at natural gas, we can only answer that by not only taking a look at those technicals, but also at fundamentals, macroeconomics, and geopolitics. Because, for example, the DXY and also the storage and the Strait of Hormuz are playing big roles with natural gas. And so let's first have a look at storage. We do have a negative value here. We do have a negative net change of 52 in this week between the 13th of February and the 20th of February. This is actually then resulting in a change from 2070 to 2018 billion cubic feet in storage. And that obviously shows you we do have less storage. This is a bullish factor in the short term. And so to add on to that, we have to take a look at what is currently happening here in the Middle East with this war that is going on since the last weekend. And obviously the Strait of Hormuz is a really important choke point. It is a point that is really important concerning the global natural gas trade. And in fact, you do see that around 1/5 of global liquefied natural gas is actually traded between the Strait of Hormuz. And that is actually primarily coming from Qatar, which is also currently being bombed. And so that obviously could lead to supply disruptions. But additionally, you have to obviously mention that a lot of this is actually not going to the US, and therefore it is maybe not even influencing the US natural gas prices as much, since 83% of liquefied natural gas is actually going to Asian markets. But even though we are seeing a lot of that being shipped to Asia, we obviously still have a lot of supply disruptions concerning the closure of the Strait of Hormuz. We do have the fact that gas storage is also currently being depleted. And those two factors are obviously currently in play and could lead natural gas higher in the next few days and weeks. But let's add on to that by taking a look at the past cycles and learn from them, because natural gas is moving in cycles, as you can briefly see here with the weekly chart. And so if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future update videos. And also don't hesitate to ask questions down in the comments or just give us your opinion concerning natural gas. Now let's have a look at the weekly here. And what you can beautifully see is exactly what we've just talked about, the cyclical nature of natural gas. You can see the S&P 500 divided by the unemployment rate squared, then multiplied by the US inflation rate year over year, and that multiplied by the US interest rate, normalized by the M2 money supply. This sounds a little complicated, but eventually this is just a interesting ratio that is falling whenever you do see economic distress. You can beautifully see that that has actually fallen before we've seen those recessions here, beautifully marked by those red areas. And obviously the denominator, which is in this case the US unemployment rate, squared, when this is actually growing, then you tend to see this ratio falling. And that's exactly what we've seen previous to the dot-com bubble crash, previous to the great financial crisis, previous to the COVID crash. And we have in fact seen that happening for quite a while now, since 2023. And that is just exactly the reason why we at Chronos are quite conservative concerning the global economy, concerning natural gas, because obviously the last few times those recessions happened, we've seen massive sell-offs here at natural gas, not only here after the dot-com bubble bursted, but also here with the 2008 great financial crisis. Now let's add on to that by taking a look at the S&P 500 normalized by the M2 money supply, so divided by the money supply. And what you can beautifully see is that we are currently here at levels that we've last seen here with the dot-com bubble forming out. And so that actually led to a big crash, not only at the stock market, at the S&P 500, but also obviously at natural gas. And we'd like to take a look at those cycles at natural gas by taking a look at the stochastic RSI, which is beautifully showing you, obviously, that those lows here at natural gas are always coinciding to lows at the stochastic RSI, and those are beautifully showing you the cyclical nature. And in fact, if you have a look at what we've recently seen happening here with the stochastic RSI, is that we've actually had a lower low. We've seen that low here in September 2025, and we've just actually swept the low. We've seen a new downward trend forming out here at the RSI, and that is certainly concerning to us at Chronos, because that is all showing you that history might repeat itself, that we might see the end of this cycle coming nearer and nearer. And we expect to see a deflationary crash happen here in 2025. And if you have a look at the DXY, it is already rising here. And if you have a look at the weekly chart of the DXY, you can see that we are moving in those cycles. We do see that those crashes at natural gas, those general crises that we've seen happening, those recessions that we've seen, they've all coincided to the DXY strengthening, because obviously those have all been deflationary crashes, right? You just do see history repeat, but obviously before those crashes happen, you tend to see massive inflationary booms with the DXY falling significantly. And so that is exactly putting it all together. We do see inflationary booms, and then we do see deflationary busts. And therefore, we at Chronos believe we can see this inflationary boom maybe actually regain some strength again in the next few days and weeks, as we are seeing storage being depleted, as we are seeing the Strait of Hormuz actually leading to supply disruptions, also concerning the US natural gas market. We do believe, however, that in the long term, we do see a deflationary crash happen, as we might see the DXY finally break above this resistance, and that could obviously lead to this cycle ending once again, this leading to deeper natural gas price movements here. I hope you enjoyed the video. I hope you learned something new. If you did, don't hesitate to click the like button and subscribe so you don't miss future videos, and also support us for our work here on YouTube. Thanks for your support. See you the next time. Bye bye.